Joining me now, two analysts who cover two different parts of the retail industry, BMO Capital, Simeon Siegel, and Evercore ISI's Greg Mellick. Greg, I'm going to start with you just because we did just speak give the Costco CEO soundbite, and I know that's in your coverage. Do you believe that Costco is one of the players that's getting it right like so many others do? And what are some other names that may be good to play as we look at potentially slowing economic growth?
Yeah, we do like Costco. It's one of our top favorite names with a buy. I think the key there is that the consumer really loves the value. So they play to a middle income, higher income consumer. They won millions of new subscribers or customers during COVID. And now their renewal rates have hit record highs because people really love the shocking value that Costco got them. So Costco is one that we like here.
What about Walmart and Target, Greg? Obviously, these businesses are largely considered fairly well run. They had decent sales, but really sort of mismanage, I guess, the cost of inflation and freight and all these other factors going into the quarter. And their stocks took a beating as a result. Do you think, Greg, that Walmart and Target then make more attractive entry points here, or is that not really where you would play this value trade you're talking about?
Look, they're more attractive at the beginning of the year, but frankly, we've successfully avoided them. And I think the issue is that when you have 40-year inflation, you need companies with pricing power. And Walmart and Target fight in the middle of it in general merchandise with Amazon, which has seen their margins go negative given all the capacity they added. So we would prefer something like a Home Depot, which is down 30%, almost as much as Target. But our Target estimates and earnings are come down 35% this year, whereas our Home Depot ones are unchanged at $16.50, and that stock's almost down as much. So we would go for pricing power names like Home Depot. Some of the auto parts names, such as O'Reilly Automotive, would be our top names.
And Simeon, your coverage list, of course, looks a little bit different. You have a number of the specialty players and a specialty in a number of different areas. So this makes it potentially even harder for you. But what names look attractive? I know Gap is one of your coverage names. I believe you have it as a hold, even though, my gosh, there's been a lot of turmoil, including the CEO just recently out this week. Last week.
If it wasn't hard, it wouldn't be fun, right? I think to Greg's point, at the end of the day, there's the numbers and then there's the multiples. The stocks are showing a drastically worse case, and to the point your prior guest had made, than the numbers have shown. Multiples have contracted. So I think for someone who needs to call the bottom, it's a very difficult environment. For someone who's looking for an opportunity to pick up some stocks that have effectively come down with the rest of the market, it's interesting. And so that's this story of what we're looking for are companies that are better off financially than they were pre-pandemic. You and I have talked about an Under Armour, a Bath and Body Works, like these companies that went from Under Armour was a cash burner. It's now cash generating. It was effectively not making money. Now it's a high single digit margin. So there are companies that took advantage of the last few years and they recalibrated, refashioned, they fixed their businesses. Their multiples right now don't reflect it. So that's how we're looking at it. And I think to your point, there just happens to be a lot of management turnover as well. And that's, I was looking for the common denominator today. There really isn't one. I think all of these companies watched this amazing benefit last year, and now they're all feeling some pressure.
Right.
And the question is, who's pulling the ripcord?
I think it's interesting that Under Armour is a pick of yours, and when that is one of the other companies without a permanent CEO right now. Before we let you go, Simeon, because you do have such a wide coverage and covering a bunch of different specialty subsectors, can you give us a couple names that we might be looking at to play, even if we are still faced with record high inflation in the months and potentially a year or so to go?
Yeah, so the two that I just mentioned, the Under Armour and Bath and Body Works, are the go to sleep for a year and they're going to be a lot higher. The other side of the equation to what you're getting at now would be, let's say, a TJX that still has, it's maybe my version of a Costco, where you have companies where people will trade down, but also the brands will gravitate towards them. So an environment where things get tougher, people go to TJ.